Hello YouTube, it's your boy the Crazy Trader, and I'm here again. I didn't want to do this again because I keep doing this. I keep doing this over and over again. I keep going over IVR over and over again. It makes me lose a lot of time when it comes to making other videos for other stocks. So because there are other great stocks out there that I mostly want to make videos about, but it seems like we are stuck with IVR anyways. But I'll make this video. Just, I mean, there's a lot of panic out there. I keep telling people, if you're panicking, then that means you don't even have to own this stock in the first place. I mean, if you don't know the fundamental of this stock, please don't touch it. Don't touch it. Don't get burnt. Okay, you move on to it. There are some great mortgage REITs out there. There are some great REITs out there that are doing great, that are also paying dividends, that are also doing great. But this is for the brave hearts. Okay, this is for the diamond hearts. You don't touch this if you don't have a diamond heart. If you want to swing trade it, you can't even swing trade this stock. The move is not too volatile, so swing trading it is just like a death trap. You're gonna get bored. So you can move on to other, like go to an electric car like Neo went all the way to 42 and then it's back to 40. I mean, it will go to 38 and go swing that one, go swing ride, go swing other stocks that are swingable, but not IVR is not straight swingable. Okay, so this will be a quick one for you guys who are, a lot of people were talking about the offering that they had recently. Just a quick portfolio review of my portfolio. 37,700. I mean, we did well today, almost 38, and then it dropped somewhere in the middle, but that's fine. So let me go straight onto IVR. As you know, I keep saying, my share is supposed to stop at 2,500, but now it's at 2,700. I think I'll average down a little lower to 3,000. That's 300 more shares, and see how it turns out. Okay. And this steep drop, I'll show you what happened. This steep drop from here, from 367, I think it came to 354, and then what this big steep drop came from the offering that they had. Okay, I'll show you what. Okay, this is the offering that they had. Invesco Mortgage Capital announces public offering of common stock. So this is, I'll read just a brief part of it. Okay, May 26th, IVR announced today that it plans to make a public offering of 37.5 million shares of its common stock. The company, blah, yada 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 yada. I mean, okay, so this is what is going to use the intended stocks, I mean, offering for. I'll show you. Okay, right here, this is what the offering is going to be used for. Okay, so the all outstanding shares of the Series A preferred stock will be redeemed at cash redemption price of $25 per share, plus any accrued and unpaid dividends, whether or not get declared from April 26, 2021 up to, but not including the redemption date. So IVR issued preferred stocks, Series A preferred stocks. I don't want to go into what a preferred stock is or anything, but they have a callable preferred stock. I can do a video on that, but if I want to add that to this, it's going to be a very long thing to do. But I'll show you the preferred stock. This is their preferred stock, and the price of their the Series A preferred stock is $25.25. That's their preferred. That's IVR's preferred stock. Okay, so normally preferred stocks are a way of raising money for the company, and most preferred stock, they have a set percentage of dividends that they take. And sometimes their interest rate that they were raised on are very steep sometimes. So if the interest rate drops, a company will normally raise money and buy out the preferred stock that they issued. Let's say if they issued the preferred stock at 7%, they'll buy out every stock that they issued at 7% and now resell them at 4%, saving them 3%. So basically that's the the basic maths of it. Saving 3% of their money. I don't know what percentage IVR raised their preferred stock at, but I believe they are buying them so they can reissue them as a very good percentage. So that's my basic understanding of this one, because I think the interest rate is down, so they are buying them just to resell them. Issue advantages of a callable preferred stock. I specifically dug this out for you guys. Okay, so for example, a company that has issued callable preferred stock with a 7% dividend rate will likely redeem the issue if it can offer new preferred shares carrying 4% dividend rates. Okay, so basically this is what I think IVR is going to do as an issuer. So they are going to buy their expensive preferred stocks and then sell one that is least expensive, so they can, you know, they can save money on that side. That is why they are having the offering that they are having. Okay, so the offering is going into the company, it's going back into the company. That is an investment back into the company. So I am not really scared about what is happening with the offering. A lot, like I said, I have an offering video and I've done this over and over again, so I don't like doing it anymore, because I have an offering video. When they had an offering, I had the video about the offering, and then you can go back and look, search in the videos when they had the first offering. So this second offering goes into what IVR is doing as a brand right now, as a stock right now. So I'm not shaken by it. I will keep accumulating, and I believe it's going to do really well, because I'm not even bothered by it in any way, because I believe it's going to do really well and it's going to bounce back. But if you are scared, please hop out real fast. Hop out before you get burnt. So I just, in my research, I was researching just a little bit today, and I pulled out the I like looking at this a lot, and I like sharing it with you guys. Okay, so I pulled out institutional holders in this, you know, in Nasdaq.com, and you guys have always known that it has not been updated for a while. Just BlackRock and Vanguard updated theirs, where BlackRock added 9 million shares. Okay, so I wanted to see what the update was like and bring it up to you guys. And now look at the update. This is a crazy update. Every institutional holder that I know, like every institutional holder that I know and trust, have added more shares to their, you know, their portfolio. Okay, this is a lot of them. I'm just showing you the first page. There's 1, 2, 3. There's a lot of pages. Look at this. This is 2021, 20. They've all updated theirs. It's all an updated version. So this is March 31st. You know, the first quarter. Everybody that I know, look, BlackRock added 9.6 million. Vanguard added 5 million. This one I don't know, but they added 1.6 million. All of them. Charles Schwab added 700,000. Bank of New York added 400,000. Credit Suisse added 400,000. LSV Asset Management also added 52,000. This is awesome. And then Two Sigma Advisors LP, they just I think they got into it and they added 3.1 million shares. Okay, that is a 2,706% increase. Are you kidding me? Beach Point Capital added 3.4 million shares, a 200% increase. These are the things that I look at. Okay, these are some of the things that I look at. So I love this. Let's look at the people who decreased their investments. Okay, some people decreased. You could see just 2,000 shares or decreased for 400,000. This is 2 million. That's a steep decrease, a steep sell-off, which is okay with me. You know, 50,000. You know, 1.2, 120,000. You know, just basic ones. Apart from this huge one, 2.5 million shares that was sold off. The rest are just, you know, basic sell-off, just little sell-off. So if you look at the increase and the decrease, people are buying more than people are selling. So I'm not worried about any fundamental about this stock, because a lot of people are also doing their due diligence, not just me. So if you're here about this stock, I personally think it's going to do really well, but it's going to take its time. So I'm not worried about it. The only thing I'm worried about is my average cost right now is at 374, and I would love to get it down to 340 personally. I'd love to get my average down to 340, but I'm still looking at it, and anything that happens, I think I'll go for it. Hopefully if it goes down some more, I'll buy into it and decrease it down to 340. That's way better for me. The dividends are good. I'm looking at the next quarter. If the dividends get better or it stays the same, I'll still be in this stock. I love it, and I'm still keeping it. Anyways, I'm out of your hair. You stay safe out there, and like I always say, scared money don't make no money, and you always gotta risk it to get the biscuit. Peace.